before that, quickly attempt to this question. State briefly the purpose of accounting. State briefly the purpose of accounting. I'll give you some few minutes to put in whatever you go further. Let's look at the various types of business entity before we start looking at the bookkeeping and accounting. What are the various types of business entity? In business, first of all, let's define a business. As you can see on your screen, a business is a commercial or industrial concern which exists to deal in manufacturing, resale, or supply of goods and services. A business must be a commercial entity. It's either the business is producing, that is from the manufacturing angle, or the business is there to resell. So, as an agent, for all, the key word is that there is a financial transaction. A business is an organization which uses economic resources to create goods or services which customers will buy. Now, there is an object. So that the business is into services or the business is creating goods. So there are transactions, financial transactions that the business entity must undertake. That forms a business entity. Okay. Now, in accounting, we shall only look at three major branch or types of business entity. We'll look at the sole trader. We'll look at the sole trader, who the sole trader is. We'll look at the partnership business, and we'll look at the limited liability company. To aid the understanding of these forms of business ownership, in summary, we will look at this table to summarize the various forms of business ownership. But before then, let's discuss a sole trader. The word sole means single. Of course, we know trader or a proprietorship means an owner of a business entity. So sole trader, we can say that is a business owned by a single individual. Business managed and owned by a single individual with the aim of making profits. That is a sole trader. What are the characteristics of a sole trader? We can look at it in terms of ownership. Say it is owned by one person. Look at it in terms of profit. Say he enjoys profit alone. Look at it in terms of limited liability. The sole trader has no limited liability. The liability of the sole trader is unlimited. Look at it in terms of legal entity. He has no separate legal entity. If you look at it in terms of decision, he takes the decision alone, and then there's quick decision in the business. Okay, the table will aid us in understanding better when we get to the summary of it. Then we look at the partnership business. In law, a partnership is any form of business unit that two or more persons come together to pool their resources with the sole motive of making profit and sharing the profits. They put their resources together to establish a business either in manufacturing or in commercial sector with the sole aim of making profit and sharing the profit among them according to the stipulated agreement, stipulated deed. Because the business is owned by two persons, there must be a form of agreement. That form of agreement is known as a partnership deed. So a partnership deed is needed. So in partnership, we talk about deed of partnership. Okay, partnership deed is about deed of partnership, because the business owned by two or more persons, as a result, they must come together, they must agree on how the business must be run. They must agree on share of profit or loss. They must agree on the amount of capital they need, each of them, or each of the partners need to be contributed. They must agree on whether or not a new partner will be admitted. They must agree on whether or not interest will be paid on drawing. They will agree on whether or not salary will be pay to any active partner. So in a partnership business, there must be a deed of partnership, an agreement binding the partners in a partnership business. Such agreement we call it a deed of partnership business. There are two types of partnership business. We have the ordinary and the limited partnership. In the ordinary partnership, the partners' liability, the partners bears the liability of the business equally. So no partner is exempted from the liability of the business. Or probably they bear the liability of the business according to the profit ratio. Okay. Then in a limited partnership, the liability of some partners is being limited to the amount of capital contributed towards the business. So their liability is being restricted. What do we mean by what was a business that has a limited liability? That is, in the event of bankruptcy, that is, the business failed and the business is in debt, the partner whose liability is limited to the tune of the capital he contributed will be exempted from the debt. So, in a partnership business, a limited partner is limited. A limited partner is exempted from the debt of the business whenever there's a business failure, or probably it will be what? His liability towards the debt of the business is to the tune of the amount he contributed in the partnership business. But for a partnership business to exist, there must be a risk bearer. That risk bearer is known as a general partner. So the reward, the general partner must exist in a limited partnership. What are the types of partners in a partnership business? We have an active partner, the one who contributes money and also take part in management. What is the active partner? Contribute money and take part in management of the business. You have the sleeping partner or dormant partner. The sleeping partner only contribute money but do not take part in the management of the business. Likewise, you have the general partner, which I explained earlier on, that he is a risk bearer. He must be part of the limited partnership before a limited partnership can be valid. So the general partner must exist. Okay, they will have the nominal partner or quasi partner, a partner that only contributes money to take part in the management, but only what contributes his name. His name is being used, being mentioned, or his name popularly, or a permanent secretary of the partnership business, whose name often occur in the register of the company. So that is for the case. That is for partnership business, and we'll get to know partnership, discuss partnership account in subsequent classes. Okay. Then we look at the limited liability company. The limited liability company is a company that is owned by people who, by virtue of purchasing of shares, become part and parcel of the business. That is, by power of purchasing shares of this company, one can become part of the owners of the company. So the interest which the holder of the shares of the company has in that company is the unit of shares possessed, or the unit of shares acquired. So a limited liability company is a business owned by more than two persons who purchase the shares of the company to own a business, manage a business, control a business in order to maximize profits and receive reward through dividend, because the reward of a shareholder is dividend. Limited liability company of two types. We have the limited liability company, private limited liability company, the LTDs, the LTD. Then we have the public limited liability company, the PLC. A private limited liability company must have ownership ranging from minimum of 2 to maximum of 50 by law. That form of business is known as a private limited liability company. A public limited liability company, on the other hand, must commence with a minimum number of 2% without restriction to its maximum number of shareholders. But they both have the same objective of making profit. Both both have the same objective of making profit. Both of them, be it limited or public, the limited, both of them uses shares as a source of raising funds. Uses shares as source of raising funds. But a private limited liability company must sell its shares to selected persons. They don't sell the shares on the floor of the stock market to selected persons. So they sell the shares to selected persons. Shares are not sold directly to the members of the public. So whereas a public limited liability company can sell off its shares on the stock market directly to the members of the public without notifying the shareholders. The shareholder can dispose the shares on the public market. Okay. So let's quickly summarize this form of business ownership, considering looking at the table. Okay. Now we have forms of business ownership. We have the sole trader, we have the partnership, we have the limited liability company, then we have the public company. Now let's start by looking at the objective. What is the objective? All of these forms of business ownership we've mentioned, they are there to maximize profit. So I can say maximize profit. So profit maximization. So they are there for profit. So they are there to make profit. Partnership are there to make profit. Private company too are there to make profit. So the private companies are there to make profit. So that is a private company. They are there to make profit. So profit maximization. Likewise, the public company are there to also maximize profit. So all of them, be it sole trader, partnership, private company, public company, they are all in business to maximize profit. And let's look at source of capital. So a sole trader, the major source of capital is a personal savings. So personal savings. So please pick up your pen and keep note of this. Personal savings. Then to a partnership will be partners contribution. Partners contribution is the major source of their capital. The private company will be sales of shares. To selected persons. Okay. Then for public limited liability company is sales of shares to the public. Sales of shares to the public. Okay. Then the size of capital required.